In the currency quadrant, taking a look at the June British pound futures. Yes, we're looking at June already. Down 89 basis points on the low, and despite today's sell-off, we had a strong week in the sterling. The sterling actually ended the week higher by just under 60 basis points, just over 0.5%. On the low side of things, I mentioned down 89 basis points. That was one spot, 3867. On the high side, reclaim that 140 level for just a little bit, up 12 basis points at 140.09, settled below 140, however, down about 44 basis points on the day. Now, UK GDP came in a little bit better. That's part of the reason that the cable was able to get up off the mat the way that it did. We had 3-month average of UK GDP coming in down 1.7%. Sounds horrible, but expectations were down 2.5%. The last was actually up 1%. And then year over year GDP down 9.2%. Sounds even worse. But the expectations were for down 10.9%. The last was down 6.5%. So all of it came in a little bit better than expected. Now, given that, and given the pretty decent inflation figures we got out of the UK, the Bank of England meeting that is happening next week becomes more important. Now, they're expected to leave asset purchases the same, obviously leave rates the same, but the commentary on interest rates itself, how they're going to frame it, is going to be watched by British pound traders when you consider that U.S. yields have been rising and it is starting to bleed into Europe and the U.K. They're going to have to address it. They may not necessarily address it in the meeting itself, but they're likely to address it in a statement or a press conference. If not, there'll be a lot of pressure on them to just kind of address it through the media during the week. So they've got an opportunity, and that meeting is going to be closely watched by British pound traders.